Hi guys, welcome to another video of mine. Today we are going to talk about gold. So we will go into the fundamental parts of gold, a lot of peripheral, a lot of things that we're supposed to know about gold. So whenever you want to trade gold, since it's a commodity, though it's not viewed as a commodity, we are going to look deep into the fundamentals, because without the fundamentals there is nothing you can do about gold. There is nothing, you can't actually trade it. So because technical analysis is not enough, but we can start with the technical analysis. All right, so let's just look at the technicals. The only thing I can see here is these are time frame order block, as you can see. So we have these time frame order block, and the price is consolidating around here. So what it looks like is the price will actually go higher, then from there it's gonna fall. All right, so it might take out this liquidity, it might not take out this liquidity. It depends on what the fundamentals are telling us. So let's dive into the fundamentals. Okay, yeah, I'm going to start with the curve. As you can see, this is the first thing that we'll be looking at, and these we are looking at the divergence between the curve and the gold. All right, so just like something like this, we can see the all of accumulation around here, and the price later went up a lot of pips there. And we are looking for the same thing around here. So though the price is consolidating here, a lot of people are already putting a lot of sell orders here. I believe that it's not yet ready. I believe that this will be taken out. You understand? I believe this will be taken out. So we're going to see some higher movements taking out this particular high. Then from here, we'll know what to do. All right, so this is another value line. So this value line is derived from inflation. All right. Since inflation is negatively correlated with the price of gold, a lot of people, a lot of investors actually hedge against inflation by purchasing gold, using different means, maybe by ETF, by mining stocks, or every other things like that. So we know that inflation is negatively correlated with gold. So since these are already turned it around, so you don't need to ask me a question on how I do it. So right now we can see that this is being bearish right now, is not making any higher high, and gold is actually making higher high. All right. So now we are still looking for gold to make this one price swing right now, one price swing, taking out this high. Then from there, we will be willing to sell from there. Okay. So this is another value line which represent the interest rate. So there are so many tools that we can use for that. I have, I think, 3 of it, but I'm going to use this one first. I'm going to use this one first. So, and from what we can see here, we are on the daily time frame, and we see that there is a big divergence on the gold and this interest rate. Remember, it is interest rate normally is negatively correlated, but there's a way we actually coded all these value lines so that it will be normal and positively correlated with the price of gold. So now what are we watching? We are looking at gold to sell at higher prices. That is what we are watching. That's what we're looking at, because all these value lines are going down. All right. So we need gold to also go down. So as an institutional trader, we'll be willing to sell at higher prices. This is one of the mining company value line, and it is positively correlated with gold. And what we are looking for is for this line not to make an higher high. Even if it makes an higher high, you need to see the divergence between this mining company and the gold. So this one here is the value of silver. All right. So if you can see our silver drop up to this extent here, If gold makes an higher high and silver does not, that means we are going to be selling gold at higher prices. We can also sell silver if you want. We can actually sell it if you want. But since we are interested in gold, we want to be dealing with the gold. This is like the number 2 important value line. Sometimes it falls into the category of number 1, sometimes number 2, but it's very, very important. Without this, there is no analysis on gold, all right? So what can we see here? We can see that there is a sell pressure on this particular value line, all right? Why gold prices is making higher high, a buy pressure there. So this means that this is just like a distribution. You understand? This is a distribution and the price will later fall. They're accumulating short positions, so the price will later fall. This is what it means, just like what we have here. So this shows us what is going to happen before it happens, and it is very, very accurate if you know how to use it. So you can see here that this price has been going down when gold price was up here and it was consolidating, making higher highs, accumulating a lot of short positions, then before selling, before we have this drastic sell. So the same thing is going to happen here. We are going to have a drastic sell on gold, and it's going to be massive. Yeah, it's going to be massive. All right, so these are the number 1 value line of gold. These lines are very, very important. These value lines are very, very important because they tend to show you what is going to happen on gold before it happens. You understand? There is no other places you can get to this line. So if you look at the example here, when gold was making higher highs here, you can see these lines, they started selling, they started making lower lows. So this means this is just a fake out. And when you see this 3-step accumulation, you already know what to do. It's just what a sell is coming. All right. So you just have to prepare for it. So likewise, the bullish trend here, then the bearish trend that is coming, you can see this line being bearish. And look at this too, bearish. Both of them are not bullish, but they are what? They are bearish. So this means that something is coming up on gold. You understand? So there are sometimes some institutional traders will trade this as a spread trade. You understand? I will have done the video on the spread trade, but I really want to focus on gold, and I can also do it as a spread trade if I really want. So I'll just, if I want to do it as a spread trade, I'll just buy this and I'll sell this. You understand? And when I do that, I'm going to make a whole lot of profit because none of my trade is going to be in loss, even without using stop loss. All right. So this trade is guaranteed because it is like 99% up to 100%. You understand? So no matter how, whatever you sell and wherever you buy, you are going to be in profit. You understand? So sometimes it might be in a short time, sometimes it might be in a long time, but you are going to be in profit. So if I want to do that, I can do that, but I really want to focus on good, and I might end up doing that. Okay, I might end up doing that. So this here is our market maker line. We've not talked about it. So this is a market maker line. This also shows us what the market maker are doing. And as you can see here that we saw the traces of the market maker before the price started selling. And here the price, we saw the traces of the market maker before the price started buying. And right now what we are seeing is the traces of the market maker. So you can see them being bearish right now. So this price might go up, but we don't want to see it taking out this high. So we want to see it making lower lows and lower highs, just like what it was making here, higher highs and higher lows. Here it was making lower lows and lower highs. It's never taking out this high. So we don't want to see this taking out this high. We want to see it actually making lower lows and lower highs. So if it does take out this high, it means that they are going to take out this particular high, and this particular order block is not going to hold. But if this stays around here, so it means that the other block is going to hold, and boom, we are going to be bearish. So that's the market maker line. So let's just go to the order flow to see what is there. There are still some other things that you can see. We have over 19 value lines, 19 fundamental value lines for gold. But I just touched a few of them, and let's just go to other things. All right. So from the looks of things, and as we can see, we don't really have much going on here except this consolidating area. So this shows us the real-time bias, and as you can see that the real-time buyers are going bullish right now, and there's just a consolidation around here, nothing much here, but we are expecting the price to be bullish to take out this high. That is our anticipation, though we are not going to be buying it. We are interested in the real market maker sell, and we want to actually sell. We can buy this, for short-term profit, but we don't really want that. We want to engage in the sell. That is our plan, and that is what we are going to do. If you check the other things, you can see that here we have some buyers, then we have some sellers. The seller reduced from here, then it's reducing. So as you can see that the sellers are reducing, they're reducing. We have 165 here, we have 140 here. So we don't really have much sellers here. So that is why I said in the short time, if we want to trade this, we can actually trade this, but we are interested in the long term. That's what we're interested in. So for now, I'm going to stay here and wait until the market takes out that high, then I'll come back. All right. All right, guys, welcome back, and we're going to continue on the explanation on gold. So this is after 2 days. All right, so this was when I was making the explanation, and today we are here in the exchange session. Yeah, we are here now. So um we actually bought gold from here. As you can see, MT5 don't lie. It's going to tell you where your entry is and where your exit is. All right, so I said I might end up scalping the buy, and I actually bought it because I was expecting a sell above here. So I actually bought it from here. All right, I wanted to buy it from here, but the spread. So I actually bought it from here, and then I exited here. All right, so after exiting, I was sold here again, and that is what I'm still holding now, and we are sitting on a 3,300 pips, 3,300 pips, and still reading. All right, so I said earlier that there is going to be a high probability trade, and it's going to be very, very big. And look at this, it is very, very big. All right, so the question you need to ask is, how many people got the entry exactly here? All right, so before you can get the entry here, you need to have some kind of level of information. All right, some kind of level of information to actually know what is happening. All right, I can actually sell here again because I saw it. All right, I saw it. I can actually sell here again, but I'm using 2 lot size, and I don't want to exhaust my position, so just left this one here, and now we are at a break even. So now let's go. I'm going to walk you through some explanation on this. So as you can see that the liquidity above here is what they use to actually initiate the sell that came around here. So we actually bought from here, it's scalping. So we bought from here, we took some profits here, and boom, we sold here too. So we can actually sell here because it's going to be very, very high probable. So but we sold here and we held on to that position. And this right now is giving us over 1,000, over 30,000 pips from our entry down here. So over 3,600 pips currently. So I'm still counting, I told you it's going to be big. All right. So let's go to some order flow. All right, so this is some order flow. We're going to start from here. So from here, we could see that we saw some sellers here and some buyers here. So this is where we sold and we took our profit here. All right. So, but if you look at it, you will see that the real sellers, they've been going short. So with this information, you will know that something is actually going to happen here. And that was why I make an entry here. And this also signifies a better entry because you could see them trapping some buyers. So look at the buy orders here. So look at the B. The B is around 128. It's not 128 lot size. So it's not 135, but we have 135. We have so some buyers are buying here. Why will you be buying expensive here? All right. So anybody that bought here, they use them as a liquidity to actually sell this gold. All right. So this is a very good information when you know where the trap buyers and the trap sellers are going to be. So this is where the trap buyers, this is where they are. So these people, boom, have been tricked. All right. I won't say they have been tricked. So, but that's what it looks like. All right. So another thing you also look at is the way the orders are coming in. This was where I sold. This was where I sold. So when you see this, you notice that the buyers are coming in, the buyers are coming in, some sellers are coming in. Now, if you look at this particular candle, you see a lot of seller here. All right, a lot of seller here. So since we have a lot of sellers here, it means something is about to go down. Something is about to go down and it's going to be very, very big. All right. These are, you know, that something is going to be big. Then we have some buyers coming in, some buyers coming in. Then they reduced, the buyers reduced. You can see from 549 to 428.6. So the buyers reduced and boom, some sellers getting in back. So there are so many entries with this. You can see some sellers imbalance and you know, a lot of entries. So we make an entry and boom, the price went down up to here right now. So this is where we have right now. You can see the chart moving. So this is where we have right now. And we are still looking to hold this long time. All right. And that'll be all for now. Thanks guys for watching. Make sure you subscribe for more videos and I'll see you in the next one. Bye. All right, guys. So this is 5,000 pips of movement. Starting from on the 25, that was the entry, and now we are sitting on the 28th. That is 3 days worth of trading, and the total pips is around 5,000 pips. All right, 5,400, blah blah blah, 5,500. So now it's very good, you know, very, very wonderful trading these and having the weekly range on 5,000 pip on goods. And I'm really happy to do so. All right. Take care.